Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Guys, thank you so much for joining me. We're looking at the All Ordinaries today. We're looking at probably the S&P 500 in America. We're also looking at the FTSE in Europe and a few of the Asian markets like the Nikkei and the Shanghai Composite for China. But let's just jump straight into it because we're looking at trends. We're looking at where the market is heading. If we know which way our market is heading, we might know which way 3 out of 4 stocks in that market are heading as well. I hope that makes sense. Very, very simple prospect, very, very simple idea, and one that can be extremely powerful for you as well. This is the All Ordinaries, very quickly. Now, the best part about the All Ordinaries at the moment, over the last couple of days, over the last couple of weeks, we've had a few short-term exit signals. One there, short-term exit signal right there. The market has fallen from those points. We've had, this is probably the single bar reversal, so that single day, and as you can see, it's now formed support for everything pretty much. The market has come up, it's bounced off that support level again. This is just a long-term trend line that you can see here. And so that long-term trend line, as you can see, it did bounce off that as well. So the market is sort of moving within the right forces, which is exactly what we want it to do. Now, apart from that, what we've got is this downtrend line. So that's exactly where the market is finding resistance at the moment, around this level. Now, what we want for a better uptrend signal, because obviously everybody knows the market is heading up at the moment, and the reason for that is for these few things. We've got this single bar, which gives us massive support because it started high, gone down throughout the day, and then closed high. It just signals that there's a lot of buyers at and around this point, around 4,000. 4,000 also being a very nice round number. It's a big psychological number. It's a number where people are going to buy. Now, apart from that, we've also, so it's come back. It's found support at that level. Apart from that, we've got another bar, a single bar, which starts very low and then closes very high. Now, that's basically a very bullish sign. It's as you can see, it's basically gone in the one direction over the entire day. Those bars are very, 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 very short-term signals for you, and that's basically what's happened. It's gone up from that single bar. That's the bar there. I hope you can see it okay, and I hope that makes sense because it's just very, very simple supply and demand. It means that there has been more demand than supply throughout that entire day, and then that has enough momentum to carry through for the next 5, 6, 7, 8 days, perhaps even more. Now, this is where it starts to get interesting because we've got this pattern that we absolutely want and we need, this little zigzag pattern. We've got our higher trough right here, and all we want is for the market to close above the previous peak right here. So that'll be around 4,430. Now, if it closes above there, and if it closes above there with a nice long bar like this bar here, then that is going to be an excellent sign. So that is basically what I'm looking out for a more solid upward signal on the All Ordinaries. Now, if we do get that, it's probably and quite possibly, or basically there'd be a high probability that a lot of the stocks would be heading upwards as well, so it might be a good time to buy. So that's it. Very, very simple. Look, the other alternative, guys, is that it breaks down below this downtrend line, so 3,900, about 3,900. If it does that, that's basically a bad sign, as you could imagine. But in the meantime, it's sort of within these two levels, and if it breaks out to the upside, happy days. If it breaks out to the downside, then obviously, we're looking at a continuation pattern to the downside, and that's not a good thing. So I hope that makes sense. Pretty simple stuff, really, when you get into it, and also pretty awesome stuff. The S&P 500. Okay, now the S&P 500. This is an entirely different ballgame to the All Ordinaries because we haven't had a solid higher trough yet. On a short-term basis, guys, yes, we do have a short-term entry signal. That is the meaning of this. It crosses this trend line. It's made a daily higher trough and a higher peak. So technically, that could be a very short-term entry signal for you if you were to play that way. Now, if you wanted a more longer-term entry signal on the S&P 500, you would want the market to go up, down, and up again over a period of 2 months or greater. The reason I say 2 months or greater is because any move that happens less than 2 months tends to be just, or is like, there's a higher probability that that move will be just a reaction in the overall downtrend. So I hope that makes sense. But yeah, basically what we're trying to do is just put the odds of probability in our favor. Very, very simple stuff. It's not rocket science. In fact, it's just a tiny little bit of mathematics. And I hate maths myself, but I love probabilities. So get into it. It's fantastic. And basically the odds of probability is that, yeah, if we have a move that goes up, down, up, over 2 months or more, there's a higher probability that that will be a sustained upward move. At the moment, we've only got a little tiny short move. So yes, it is an up move. Yes, you can play it if that's the way you want to play. I'm definitely not going to tell you how to play your game. However, yes, short term, yes. Longer term, not yet on the S&P 500. And again, if it was to break down, which is not looking as likely at the moment. Oh, actually, that's very interesting because we've got this uptrend line, and look at where all this consolidation is happening, right on that uptrend line. Now, look, if it does break down below this level, it would have to be around 1,120. If it breaks down below that, then yeah, that's going to be a bad sign. However, what have we got here? This single bar, exactly the same as the All Ordinaries. That single bar is going to find a lot of support for this market at the moment, the S&P 500. So yes, I mean, definitely you could play that short-term up move. Just be very wary, keep your stops in. I'd probably keep a stop at around 50% level if you were to play that way. And I hope that helps. Now the next one is the FTSE. Really quickly, exactly the same thing is happening on the FTSE. Is closed above the uptrend line. So yes, that's a good solid uptrend sign. Over the last couple of weeks, we were calling how there's so much buying support at 5,000. 5,000 again being a round number. And yeah, so very simple stuff. Psychologically, that's a very strong number. Don't ask me why. People are crazy, myself included. We do silly things in the market. But yeah, that's one of those things. As you can see, long tails. Look at these long tails. These are, very beautiful. Beautiful long tails. What that means is that there's basically buying support pushing the market up. As you can see, the closes are well off their close. And again, just meaning that there's buyers. Supply and demand, more buyers, means the market eventually has to rise. Now, what we're looking for on the FTSE, we've got this up move. What we need is a little down bar or a downward move, and then for it to follow through. The reason I say that is because often you can get a nice up move off a low somewhere, which is what we've got here. This is a new, like a sort of around the new low, and we've got a nice upward move off there. But as soon as we get a down day, people start to get scared again, they start to panic again, and the move is not able to be sustained. So what we're looking for psychologically is for a down move, and then for the buyers to come back in and to push the move up again, and that would mean that our move is more likely to be a sustained up move, and then happy days, we can we could consider that a short-term buy signal. Again, on the FTSE, same as everyone else. If we get a nice actually, yeah, so see this, we've got the low here. This is quite possibly a Dow theory entry, actually. Yes, it is. Yeah, okay, so we've already got our Dow theory entry. So what that means, yeah, all we need is just a little down day and then another up day. As soon as we get that, that could be considered a very good sign on the FTSE. And again, keep your stop losses in, guys. You could either use the 50% level right there, you could use the previous trough right there, or if you're a very short-term trader, you could look at using the down day as your stop loss wherever that down day does happen. But I would consider that we definitely need that down day, because that will be the test of the market. And I hope that makes sense. I hope that makes sense, guys. Just really quickly, looking at China, nothing much has changed in China. We called a downtrend around about here. Oh, look, we called a downtrend right about here as well. We called a downtrend here. Guys, yeah, China is not looking as good at the moment as its Western counterparts. And quite frankly, look at this, over the last 2 to 3 years, sideways and down action. It hasn't been a happy time to be trading in China, especially if you don't know how to trade short, or if you can't trade short. I'm actually not aware of the situation over there. It could be very different to its Western counterparts. But however, this is the downtrend, and the downtrend would still be in place until a close above 2,600. Guys, I'm going to leave it there. That's Asia. That's the Western markets. Hope I showed you what to look out for. So I hope that makes sense, and I hope that does help your trading and help help your learning as well, because that's what they're intended to do. Guys, have a fantastic week, or have a fantastic fortnight. I will see you next time. Until then, happy trending, and bye for now.